Good morning, everyone. Welcome to the live show. Welcome back. It's good to have you all back. The early live show, as we always have it. Let's take the risk thing off there. And let's go to the main page, which is there. Yeah. Okay, here we go. Ladies and gentlemen, awesome to have you here again today. Awesome to see you all. And yeah, what an interesting time. We're already halfway into January 2025. Spare a thought for all those people in America, California, with their fires. Sure, that's terrible. I think that's the worst disaster ever. Besides, the fire disaster ever, not just in America, I think anywhere. That's really bad. Hi, Lincoln. Hi, David. Good to have you guys. Yeah, so today's trade of the day was Great British Pound US dollar short. Hasn't played out yet, but give it a moment. It's sitting on this trend resistance, and if it breaks to the upside, then it kind of changes the whole picture to long. But yesterday we looked at US 500 short, and it was working out, and now it's come back up to retest, which I thought might happen anyway. And there's also a trend resistance there. The DAX is still short. It's coming back up to retest as well. Obviously something in the markets that's making people happy again. Look at the SA40 bouncing off here. But this is also still very, very short. So staying short on all of those. Brent is coming back to pick up some money. Looks like it's filling up gaps and it's looking for some money down here. Maybe it'll get all the way down to 77. Not really sure on that one. Bitcoin's been very volatile. Look at this. Looks like it wants to go back up again, bounce off that support and head on to the upside. So interesting day ahead. As always, the market would always lull you into a false sense of security. You're never quite sure where you're going to end up. Morning, Wendy. Welcome. Today I'm going to talk a little bit about why win rates don't work. I go over it in my videos quite a lot. People disagree with me on that one as well. So we'll talk a little bit about that. It relates a lot to the 50-50. It relates a lot to the strategy that we play. It also relates a lot to the fact that these squiggly lines don't make you money. The system doesn't make you money. It just gives you a high probability trade. Let's have the coffee, shall we? I noticed a lot of these bot comments coming up again. They were gone for a while and I see they're back. Surely they've been found out. I mean, they say exactly the same thing every single time. It boggles the mind, don't you think? Every single time the comment says the same thing. And no matter what you do, no matter how you try and block them out or whatever, it's like a virus. It just pops back, it's horrific. And they're quite irritating, to say the least. Misses whatever, blah, blah, blah. I'll tell you, these comments are ridiculous, actually. But I'm sure you guys can see through them, and you won't get caught by that ridiculous scam that they're putting out there. You can immediately see, because the one comment comes out and then another 5-10 comments come out behind it, which is the same person or the same bot answering itself or something to that effect. I don't know how it works. Only they'll know how that works, that's for sure. Anyway, for those of you who are doing funded trading in the near future, I'm going to show you how our C-Trader works. I'm going to grab another account and just show you how our C-Trader works as well. Because this funded trader account's got this trading view on it and its own little match trader thing on it. And then there's another one with like a C-Trader account on it. So I'm just going to have a look at that as well, because some of you may know how to use or want to know how to use that as well. I don't think it's too complicated or too difficult. And obviously, if you want one of these funded trader accounts, homepage, I think you can get it. Just click the link in my description and you'll end up here, and then you can get yourself an account. I don't know what their specials are at the moment, 50% off. You get instant funding, you get challenges, you get everything you need. And I like them. They don't give you any hassle. So yeah, at least there's not a big hassle there. Okay, so once again, this is showing me lower than the recommended bit rate. Why does it do that these days? It never used to do that, these live shows. Okay, so this live show doesn't have a lot of people on it because it's, besides the fact that it's very early in some parts of the world, the Thursday one's a lot better because we got the American market and it's in the afternoon and that sort of thing. But also, I mean, I'm not as popular as those guys who do the 5-minute charts and make things move around all the time and, buy and sell and stuff like that. Good morning, Business Sound. Good morning. Welcome. So, yeah, that said, we're not as popular as those guys. So we're just a small community at the moment doing our little thing and talking about trading. But like I said, how's it, Roy? Today I'm gonna talk about why win rates don't work a little bit once everyone's here, because it is something that a lot of people don't grasp or haven't grasped. The main reason being, and it's nobody's personal fault, is because everyone who teaches and everyone in the community tends to teach people that you need a win rate, and that's so wrong. It's unbelievable, because a win rate will not make you money. All it will do is give you something to boast about, but it won't make you money. So yeah, the subs are going well. I mean, wow, we're 9,200 something subs on the channel, so it's quite a big community we're growing. Not to say that all the subs are here, because you got like just a few viewers here on the live show, and they don't all watch the videos either, but it would be great if they did. That said, yeah, that's the channel is growing, and I've obviously decided to keep going with the channel and keep it going because it's good for everyone. Even once you guys have learned, somebody else will want to know the information, and it's really important. It's really important that people understand the reality behind the markets and not all the BS. Dow Jones still going down. Right, so of course I did the investing video for Wednesday. I've done an investing video for you guys on how to invest, shares, how to invest, what the best way to invest, the psychology behind investing. It's important to understand investing. So what I've also done for you on that video is I've shown you the investment calculator and how much you can make over a period of let's say 30 years with a return rate. On shares you should make 20% at $1,000, and you'll make 20 million bucks investing $1,000 a month. A total investment of $360,000. So just go through that video, check it out, see what it does for you. You can stay disciplined, and you can invest on a monthly basis over the next 20-30 years. You'll do pretty well. And it doesn't have to be $1,000. There'll be those guys that say, I don't have $1,000. Of course not. But you invest what you can afford, and you get what your level is, and that's it at the end of the day. And obviously, the best way to invest in a market is every single year to look at inflation, to up your investment by the inflation amount at least. Try and pay in a little bit more. People get a pay rise, or they increase their income, or they're doing better on inflation, but they don't put more into their savings or more into their future, and they just keep that the same. It's never going to get better, is it? So you need to look at those sort of scenarios as well. Even if you have a retirement annuity or something like that, isn't it crazy how you just keep paying the same amount and expecting a better result? And that can't happen. Look, if you're paying off a house, that's a totally different ballgame. I'm going to make a video on whether it's better to invest in property or better to invest in the stock market. I'm going to make a video on that so that you guys can get a picture of that. And you can just think logically, if you're paying for property, you're actually paying for property. So, yeah. Interesting stuff but we'll definitely get into that. Just waiting for a few more people to get on here so that we can actually start talking about strategy, the 50/50s, why the win rates don't work, and that sort of thing. And we'll get on with that, and we'll go through that whole thing. And like I said, I'm gonna show you the platforms on the Funded Trader account. I'm gonna do the C Trader as well. This is the Trading View one, which is on that funded account, and then I'm gonna show you a C Trader one as well, but I'm not gonna do that today. The news. Okay. Yeah, there's a lot going on. Dollar falls on report. Trump is Robin Hood to pay $45 million to settle charges. Worst asset for real estate. I think America's biggest problem at the moment is actually the fires, man. Jeez, come on, don't worry about all this stuff. I can't understand how a country that size isn't, all charging in there and sorting that out quickly. It's, they're a bit short on things and they need help, so get down there and help them, yeah, crazy stuff. So I think I did show you in the investment videos that you can use these. Let's just see if it'll take us to the actual chart. For example, you can go in here. This is the Coca-Cola company, for example. You can take a year. You can get a chart here, and you can get an advanced chart as well that you can use, like we use with TradingView, a bigger chart. And this gives you all the information you want for investments, the price to earnings ratio. It's quite good on this one. Earnings per share, 1 year target, that sort of thing. Gives you a lot of information. And you've also got analysis and profile and sustainability, financials, everything. It's actually quite good, this Yahoo Finance, and it's, totally free. Just use it. It's actually brilliant. You can even get charts. If you need charts, use advanced chart, and it's got everything on it. It's actually brilliant. And on top of that, you get all the news, which is brilliant. You get all the news and everything. I'm actually quite impressed with this. Have been for many years. I've always used that. I was using Bloomberg, and then they charge so much, man. I don't know if you guys know, Bloomberg's quite expensive. Anyway, so look, there's only a few of you here, but okay, let's talk about win rates, guys. Let's talk about win rates. Let's get on with it, because we have now been here for 15 minutes already, and we don't have millions of viewers. I guess we just have to accept that in life. It's a small group of people, and we work with a small group of people. So why don't I believe in a win rate? And, so many people will, every time I meet a trader, they'll tell me what their win rate is. It's the most important thing to a trader, their win rate. I got this win rate, I got that win rate, what's your win rate? And that sort of thing. And what I find with win rates is, I mean, come on, guys, is you can win 9 trades out of 10. And you can say, I got a 90% win rate. But if those 9 trades that you win only make you $10 each, and you lose one trade that loses you $1,000, then what's the point of your win rate? It's just, it boggles the mind to walk around calling a win rate, because at the end of the day, did anyone come out okay after the Friday markets? Everyone probably came out okay after the Friday markets. Good morning, Luigi. The Friday markets went that bad. In fact, they were great. That's why I'm short. I was waiting for it to break through here, and actually it was going well, and it's just come back up to retest, and we'll see. The DAX, I actually sat short on the DAX the whole weekend. I left it in. I'm quite happy with that. It's no problem. I've actually let's take the stop loss up to cost sometime. Yeah, Lincoln, yeah, didn't trade Friday, the flu. Yo. I don't think I've had the flu for a long time, eh? Anyway, okay, so as I was saying, win rates. What's a win rate? A win rate is effectively when you can say, I win so many trades on my system, and that makes me a good trader. And that's what a lot of guys are promoting, and they're promoting to you that you can make money on a system like this, and at the end of the day you'll have a win rate, and that's going to make you somehow rich. And unfortunately, that's not the case. Firstly, you don't make money from the squiggly lines. You make money from a strategy that you go into the market with. And you guys know the strategy by now. At least I think everybody here will know the strategy by now. And if you don't, just go and look at my last video. It's got it all there. The strategy is in detail. Okay, so I'm not going to bore you with the strategy today because you all know the strategy. But the whole point is, firstly, you don't make money off the squiggly lines. And secondly, you don't make money with a win rate. A win rate, all it does is give you an idea that you're winning. It makes you feel like you're winning, but actually you might not be. A good example of that is a scalper. A scalper will go into the market, take profit, 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 on and on and on and on. And he'll be thinking, I just can't lose at this because every trade I take, I'm winning. It's because you're taking a trade on a high probability system. And those high probability systems, if you trade here, if you trade long off of this, there's a good likelihood that this is going to go long initially. And then you're going to make the money off that. You know, the 10, 50, 20 bucks, whatever the case. You're going to make that money. You're going to scalp it. You're going to take it. But if you're trying to stay in the trade for a longer profit, there's a chance it might not make it and it might go against you. That's our type of trading, probability. But the scalper will keep on taking those small profits, small profits, small profits, until one day he's going to take a trade like this. And he's not going to have a stop loss in place. One day he's going to say, well, there's the money. Now, if I was a scalper, I'll be honest, I would have taken profit yesterday and ran off because I was about $300 or $400 in profit yesterday. So I would have run off with a profit. I would have been gone. But let's say you don't go into profit. Let's say you take that and it goes against you. Now, a scalper won't get out of this trade. He will hold this trade because he'll believe, no matter what, that he took this trade for a reason and it's going to work out. Whereas you and I will have a stop loss above that level, or like in my case, at that level. That's my cost of trade. I know where it's going. A scalper might put a stop loss there, but when the trade starts to get there, you know what he's going to do? He's going to move it away. I just know the mentality. I know the psychology. Okay? Because the reason for that is because you've just won 9 trades. You've just won 9 small trades. And that loss is taking out all of that profit. The psychology behind that is, wow, I can't lose all that work, all that profit. It's like it's like doing so much work, and it's like building a house and it all falls down. It's not nice. So the psychology behind it is, I can't lose at all costs. So what they do is they stay in the trade at all costs, and it just gets worse and worse, and often they'll dollar cost average, and it'll just get worse and worse and worse till the point of failure. So a 50-50 trade is what it is, okay? and that's where the understanding is not there. What actually happens is, firstly, they don't think about strategy. They think the system's going to make them money. So secondly, they think a win rate's going to make them money. And then they don't realize that your win rate, in all likelihood, in all probability, is always going to be 50-50. No matter what you do. So, because it's a market. It's made up of buyers and it's made up of sellers. And 100% of those buyers and sellers believe they're going to win. But unfortunately, some of them are going to lose. That's normally half. But in our case, 80% of people lose, 60 to 80% of people lose. And those trading 5-minute trades, 99% lose. Who takes that money? Well, the money in the market, the big money. The big money in the market takes that money. And it's so easy for them to take it. Because what people do is they take a trade, and they take a trade like this, and they put the stop loss here at 204.85, right here at the high. They put the stop loss right here, or just behind it. And the pros are looking for money, so it comes back, takes that money and goes. You've got to put your stop loss further out. You've got to put your stop loss way beyond that level so that they can't come and find that money because they're looking for liquidity. They're constantly looking for liquidity for their trades. They need to buy stock and sell stock, so they need someone to sell them the stock or someone to sell the stock to. So they're constantly looking for those areas where there's loads of money lying so that they can create their trade. I don't know if that all makes sense to you guys, but that's the basis of the whole thing. That's the bottom line, is at the end of the day, trading will always be 50-50, and win rates just won't make you the money. The only thing that's going to make you the money will be a strategy at the end of the day. And you've got to think about that. The only time you don't need a really incredible strategy is with the investment. If you put an investment in and you leave it for 30 years and you walk away and you don't worry about it and you just add to it every month and you just keep on building on it, your strategy is simple. Your strategy is buy, add to it, and come back in 30 years and see what it looks like. That's the basis of your strategy. It's not too difficult. And it's not impossible. You ask, how can we spot the liquidity area? Okay, so firstly, we spot the liquidity area with support and resistance. I've got a lot of videos on that. The guys that are here will know. Hi, Lincoln. Yeah, it does make sense because it's a mirror image of the mistakes I've made. You're not the only one who's made the mistakes, which is why I'm telling you this. Everyone makes these mistakes. Absolutely everyone, including me. You know, it's normal. Thanks, Daniel. Thanks for the congrats. Yeah, let's get over the 10K. Let's head for 100K. Okay, so we're going to speak on the liquidity because that's two questions on the liquidity now. How do we spot the liquidity? Wendy's like, please talk on the liquidity. So liquidity is an area where there's orders, money. Somebody's left money there, okay? Now you can find it with support and resistance, or you can find it with supply and demand, or even trend. So how do you know there's money there? Effectively, what happens is you're not dealing with squiggly lines, you're dealing with people. So people look at these areas. What you're doing is you're following what everyone else is doing, right? Because that's what charts are about. Once you see it that way, it just makes it think a little bit better. It's not a line. There's people in there looking at the same thing you're looking at. So they've put their orders in this area because they believe that that's an area where the price is going to go to. It's like a magnet area. The reason it's a magnet is because there's loads of orders there. So that's an area of liquidity. So every time the price gets there, it starts grabbing money and orders there, and then it goes the other way. Because it's grabbing all that money that's lying there to be taken. It could be stop losses. There's millions of people putting stop losses in. Or it could just be buy orders for later or sell orders because they want to take profit. But there's orders there. And you spot that liquidity by looking at an area where price keeps getting to. Because you can spot on the chart, every time the price gets to this level, something's happening. Okay, let's look at a better example than that. Because that is... There's okay, I need to lift this a little bit, but okay. This is, for example, the Nikkei. Let me just delete that one. And the Nikkei is a reasonable example, okay? You've put your resistance in here, you've put your support in here. And for a long period of time, every time the price gets into this general area, it comes back, which means there's liquidity in this area. It doesn't have to be a supply and demand. Just a resistance. It just means that there's orders here that's pushing the price down every single time the price gets there. Same goes for the support. Every time the price gets to this level, it's not some magic that pushes it up. It's not by some unreal magic. There is actually something there that's stopping it from falling through. Okay, it's like you've put a floor in there. That floor is money. The only thing that can push this back up is money. And I refer to money as liquidity. Okay, orders. I call it liquidity because it's orders, money, whatever. Okay, so the only way that can be pushed back up is when it hits money, when it hits liquidity, when it hits orders. So every time it gets there, look how many times it tries to get through. It tries to get through. It tries to get through. It can't get through, and then it goes back up. Now, US 500, case in point, comes down, money goes up, comes down, money goes up, comes down, heavy money goes up, comes down. Ooh, broke through heavily, broke past all these levels. Okay, I'm sure we could draw the level even lower. It broke through to the upside. Now it's broken through to the downside. It's going back to retest to see if there's any more orders or money there. It's going to look for some more money. And then if there's some more pushing it down, some more sells, it's going to push it down. It's going to push it down hard. It's going to push it down further. If there's not enough left over, then it'll go back through. So it's very dependent on how many buys and how many sells are in the market. And that's how it can push through. Because there's a powerful buy in the market, it'll push through that liquidity. And if there's a powerful selling in the market, it'll push through that liquidity. It'll use up all the money. It's not to say there won't be some left over or some put back there, because people are expecting it to come back there. Now we can look at explanations like supply and demand. We can go to supply and demand and look there. We've got a couple of supply and demand videos. But these trend lines, you see these trend lines, just because I draw it as a line doesn't mean that's not where there might be money as well. The reason I draw it as a line on a trend is it's just easier to draw a line. If I could draw it in a blocky like this, I most likely would. So the reason I draw these rectangles is because it's an area where there'll be orders. I mean, not everybody puts their order at exactly the same price. But you can look for round numbers like 57, 58, 59, 59, 50. Round numbers, because psychologically people hit those round numbers. But if you look at an area, there's an area where there's money lying around. And on a trend, you know, if it goes through slightly or whatever the case, just look at that. There might be an area there as well. But this is also an area of liquidity. And look at this. You see this trend coming down here. This trend resistance on the 4-hour, of course, comes down here. And it sits right on this area. It's gone back up to retest not only the trend resistance, but also its now main resistance, which was, in this case, a support. That's liquidity. That's money lying there. Now it's going to go look for some more money when it falls down. And this is where things fall hard. You see this head and shoulders and this long distance down. This is where it falls hard, is when there's no liquidity for a long way and there's no money to bring it back up. And that becomes difficult because the money's all the way down here at 57. So it becomes difficult because it's got to go quite far before it finds money to go back up. So that's what I refer to as liquidity. So look at my supply and demand videos, look at my support and resistance videos, look at my trend videos. All of those areas are areas of liquidity. That's what price action is all about. We're trading with liquidity. We're looking for areas where there'll be money. So for example, if something is going up and it's going off the trend all the time, it's picking up liquidity every time it goes up. It's picking up liquidity. It comes back. It picks up the liquidity from the left. So let's see if we can have a look at this. So let's see here with this. The US 500 goes up, it comes back down, picks up liquidity here from this side. You see there's an area where down, that's a support, support, support. Picks up that liquidity on that support, goes up. Same, comes back down, picks up money here. You see it's picking up money on this trend, but look left. See there's area of support. And so many times it hit that area. Okay, so that's a really important area. Comes down, hits here, goes up, takes that money, goes. It's an area of liquidity right there. There's money there. That's what it's about. And that's how you look for the liquidity. This is an area of, well, it was actually an area of supply of money. It broke through that. There wasn't enough money to hold it. So it broke through that, but it keeps coming back to this area and going the other way. So people have put their orders in here now. So now it's become a small area of support on that particular product. So there you go. You know, it's kind of like, just think of it as the support and resistance. Just think of it as the supply and demand areas, or the trend support and resistance areas. That's where your liquidity lies. That's what the big trades are looking for, that money, so that they can trade, so that they can buy stock. You must remember, they're trading with larger sums of money. They can't just trade in the middle of nowhere. If there's no money, then they can't buy it. You see, what happens is they'll go into the market in the middle here, and there won't be enough to carry their trade. All the money will be up here, or all the money will be down here. So their pricing, they're going to push it all the way down there until they get that money, and then it's going to go up. Because they're going to, the orders that they put in, it's going to take out all the small orders, and then it's going to get to the big money, and it's going to take that money, and that'll stop them, and then it'll go the other way again. Right, so, okay. I'll carry on speaking on liquidity if you've got any more questions. Right. I left 3K on the table on Friday by not trading. Yeah, Daniel, Friday was pretty decent. It's okay. I thought it was folks selling their buy. Hey guys, hope you're doing well. Hi Kenneth. Hey, welcome back. Bud, hi Rob, second time here, changed my handle. Okay, cool, welcome back. You are now Bud. Yep. It's always good to have you guys on board. So yeah, does that explain liquidity a little bit better to you? I do hope it does. Maybe I should do a whole video on it and go into it in even more detail, but I think that should cover it. It's not that big a thing. It's basically areas in the market that the big trades are looking for money on. You know, they're looking to get their money there. Yes, so when a longer than usual candle appears, it can be the consequence of a large order or a large bunch of orders. I normally look at it as a large bunch of, a lot of, let's say it's a big red candle. I'll say there's a lot of sellers in there. There's loads of sellers in there. It could all be one massive order as well, you know, at the end of the day. So, but look, let's be honest. If you see a long red candle, if it's 1 million traders or just one large order, that large order is coming from someone really big, and that you can follow that serious stuff, you know, and then all the other traders will follow as well, so it'll just make it even bigger. So we then substitute liquidity for money accumulated at a certain point or an area in the market. Okay, so yeah, you're getting that. Yeah, there you go. Daniel, good to see you again. Catch the replay. Chat soon. Maybe see you on Thursday. Cheers, Danny. Right, okay, so yeah, hopefully everyone is super profitable, makes loads of dosh, and does really well. Yeah. Why is this going up now? Yeah, I'm supposed to just go and retest here and then actually come down. So, yep. Yeah, you never know with these guys. It might go the other way. Okay, so, right. Yeah, we've all got things to do. We've all got places to be and that sort of thing. So, it's never simple. Never straightforward. So yeah, now you know a little bit about liquidity. You see these lines here as well, these trend supports and these trend resistances. They're also areas of liquidity, which is why if, for example, here you see the red line broke through the support, then we say go short, because effectively it's broken through the liquidity, so there's not enough money to hold it up anymore, which means there's some really strong selling pushing it through, pushing it down. So there's nothing to hold it up anymore. So it's a good sell. It's breaking to the downside, and you can do the sell and then wait for it to break long again. That's why these trend lines actually work quite well as well, but also the normal support and resistance does the same job. I mean, see, this is a strong support. There's a level, there's a level, there's a level, there's a level, there's a level. So this general area here is also a major support area. So it's picking up money here and bouncing. How much money here is the question, and how far it will bounce is the question. And that's always why we have these trend lines and we have these support and resistances in, so we can see what we think the area will go to. For example, here on gold, I actually should have moved this already, but yeah, there's an area at the top here where there's definitely lots of resistance. There's an area at the bottom here where there's definitely lots of support. So there's money lying here and money lying here. And every time it gets there, eventually that money will run out. People will change their minds and it will break through, or there'll be a big order, lots of sells, lots of buys. And that's what pushes it off onto the next level. That's the way it goes. Right. Now we know what liquidity is about. Now we know why win rates are not the thing to chase. We know why strategy is important. And we know that the market is 50-50. Strange how people disagree with me on the 50-50 on the market. But I think that's also because the guys that disagree with me on the 50-50 on the market are the guys that believe that they've got a win rate, and they've also been taught that the system is what's going to make them the money, not the strategy. And the longer you believe that the system will make you the money, the longer you will lose money, or the longer you will struggle to be profitable. Because while this is high probability, it's not where the money lies. The money lies in the approach. The money lies in the way you can sit back and let things happen. For example, this US 500, you were in a loss, right? So you're thinking, ooh, that's bad. But you've got a plan. You've got a plan for this whole trade, which is why it's in there. And if you just leave the trade alone, it's either going to work or it's going to fail. There's only two ways it can go. Even that is 50-50. It's not rocket science. It's either going to win or it's going to lose. It's going to work or it's not going to work. What can I say? It's 50-50. I'm not a fortune teller, a soothsayer, or anything like that. Nobody is. Nobody can predict what's going to happen next with 100% accuracy and know for sure that this is going to happen, or whatever the case. Gosh. So luckily our channel's on YouTube. I see TikTok's being removed. My goodness. Somebody's going to buy that, I'm sure. Ooh. I wonder who's going to buy that. Should be interesting. But yeah, that's all for the shorts, I suppose, for those little videos, for the upright videos and stuff, and guys jumping around and doing funny things and what have you. But I believe somehow China's involved in that. Yeah. But those guys are being shut down. Well, in America, at least. Yeah. Yeah, I did look at it out of interest, but it's very much the clown videos, the little videos where people do a quick dance, and it's not the worst thing. People like that sort of thing, and it's not for stuff like this. It's not for education, or doesn't work. But yeah, it looks like they're going to be in trouble with that whole story. Seems like the Chinese government owns it or something. I don't know, some story like that. I don't know what to believe anymore. But I wonder if someone will actually buy it out and keep it going in the rest of the world. I don't know. Should be interesting. Yeah, you put a lot of effort and a lot of work into it to make it nice and to have a situation, and then gets taken away for some political reason. Yeah. There you go. China discusses sale of TikTok US to Musk as one possible option. Don't tell me he's going to buy that as well. It's like buys everything, man. Goodness me. Now, maybe the US government will lend him the money to buy it. Yeah, I've seen lots of employees on it non-stop. Yeah, it's funny if a YouTuber bumps into someone and someone will say, "Oh, you're that TikToker." I'm like, goodness me, YouTube's been around 100 years longer than TikTok, and you're calling the people TikTokers. I mean, it's weird, man. Their name has become more synonymous with operating online than YouTube. It's crazy. They don't call you a YouTuber anymore. They call you a TikToker. I mean, geez, it's almost like an insult. Anyway, I suppose social media has become a problem where people are on it all the time and can't get away from it and stuff. And I understand that. Is an issue. Peace deal looks closer with Gaza and Israel, so I guess gold price will go sideways or down. Don't bank on it. Gold has now hit this price, and it's going to be very relevant to the US dollar and to what happens to the markets. Gold was always considered a safe haven trade, or that sort of thing, but lately it's been kind of following the markets and that sort of thing. Gold is a cyclical trade. All commodities are. You'll find all commodities, they go up, they go down. A lot like Forex, they go up, they go down. They don't just go in one direction, but they do tend to change over time rather than quickly. So, yeah, that said, it could go up or down. I'd wait to see which way this breaks out, and then take it from there. But it's due for a correction, as is everything else. So it might get a bit of a correction before it goes up. The peace deal in Gaza and Israel and all that might be a start, but I don't know if it'll affect gold that much. It will affect the oil. The oil price is a thing, so keep an eye on that. There's a big double top on the Brent here. So it looks like it wants to take off that double top. When we talk about liquidity, there you go. Triple top, one there, one there, one there. So every time it gets to this level, I remember putting the 80 level in as quite a serious level at one time. So there's money there, so it's knocked it down a bit. Let's see how far down it goes. I reckon it might come back down to the 77, take some money here. There's a supply of money there. I'll just draw it in so you guys can see it. No, there isn't actually. There's only 2 candles. If there's 3, there's a supply. So, but there is a level here of sort of some kind of support. So it probably will come into this area and then start looking for money and then head back up. So Brent might be affected by it. So there'll be lots of good news around. There'll be lots of better news around in the near future. With like what says here, peace deals, things like that. So I do believe that with the new regime in US and that sort of thing, there's going to be a lot of changes. So maybe things will look a little bit more positive towards the future. We shall see. We'll see how that goes. If it goes. Yeah, it seems that gold has been on the up since Russia invaded. Yeah, the safe haven trade, as I say, but it's never that. I always tell people, if you're going to invest, for example, if you were investing and you said to me, Rob, should I invest in the US 500 or should I invest in gold? I mean, whether it's 99 years ago or today, I'd give you the same answer. I'd tell you invest in the US 500 because that's where you're going to make your money. The gold's not going to make you the money. And Also, I'd even tell you rather invest in a few shares, because that's what's going to make you the money at the end of the day. It's a better investment. So on that front, yeah, gold's a great trade, but it's not a great investment. So if you're going to do anything with gold, short term, it's all short term, it's all trading. That's in and out, in and out, in and out. So just trade what you see. There's not much else you can do with gold except trade what you see. I think what I should do here is remove all the drawings on gold and just do let's reanalyze gold, because I haven't done it for a while. I've just been leaving it because it's in this this pattern, this incredible pattern. I just want to see what we've got here. Interestingly enough, I'm going to use trend lines on this one. Let's just see now. It's a little bit tight. Yeah, that might be it. I'm not too worried about that little breakthrough there. And we can draw a top one as well. Let's just see. Yeah, it's actually, the trend lines are actually more prevalent than the actual support and resistance, but let's just draw that in. Let's just have a look at what we've got here. And there is a level here as well. It's just actually gonna, right, let's take it back to the 4 hour and see what we've got now. Makes it more interesting now, I think. Makes it a lot more interesting now. See how that pans out in the 4 hour. On the candles, of course. So even though it's been trending sideways, we do have a trend support. We do have a trend resistance. It did break out over there, came back, retested, brent up, came back, broke back through again. Broken into this level. It's staying in this. There's your resistance now. It's much more clear. And there's your support now, much more clear. But it seems to be bouncing off this trend support here as well, which means it's kind of a little bit bullish. Not exciting, but yeah, let's see what it does. But if it breaks through here, might be a kiss goodbye. It might disappear. Might just disappear into the doldrums. The doldrums of whatever. Yeah, it bounced off support. Was it probably here on Friday, or was it here? But yeah, a good bounce. So, but Friday, yeah. You see, I've been looking at the shorts, and now they're starting to turn against me, unfortunately, which is never great. Yeah, I've actually got my stop loss at cost on this on the funded trader account. So where is it? So it's going to get taken out most likely. If it does, I'll just buy another one. Have a look and see. Just leave it for today. Let's see what happens to it, because it seems like people are now starting to get excited and go the other way. Just have to see if that breaks to the upside and goes through there. Alrighty. That's how you're feeling. Who am I to argue? Yeah, anyway, so if you guys see these bot comments, just ignore them. You know, the bot comments where they say Mrs. Jones is such a fantastic person and she made me $15 million and blah, blah, blah. And then there's 25 comments after it about Mrs. Jones. Surely they've been found out by now. Surely everyone can see through them. I don't know why people keep on posting the same rubbish over and over again. And you can't get rid of them. I'm sorry, guys. I can't get... You know, if I just click one, hide one, and then another one pops up, it's just wasting my time, really, trying to do something about it. I'm surprised that YouTube themselves don't pick it up, but there's nothing I can do about it. So if you see that, just ignore it, laugh at it, put a laughing face out. I think Lincoln did that this morning, put a laughing face out. Yeah. In 2024, up until around October, I was buying and selling gold consistently, and then something happened. I asked you about gold a while back. It seems not to be doing quite the same way. You see, Wendy, in the markets, this is something very important to understand. You, over time, get your favorites. Look, the one favorite that's never left me is obviously these indexes, the US 500 and that sort of thing. But even that, you know, you'll be trading. There was a stage where I only traded the DAX because I loved it so much. It was up and down, up and down, up and down. It was just making me so much money at one time. And then it just became terrible, and it just died on me, and I just walked away. And that's going to happen to you quite often in the markets. For example, gold. Gold will be one of your favorites, and you'll be trading it, and then suddenly it'll just change its structure, and you just can't make money out of it. You can't do anything with it. And this is why I always tell everyone, learn to trade everything. Learn to expand your horizons, because when that happens to you on a product, you are going to be looking for something else because there's nothing to trade. You're going to be looking for something new to trade, something different, because this, you can't trade it anymore. Well, you can, but you're trading it in a range, and it's not the same as the way you were trading it. It's not doing what it's not working for the way you trade. So if it's not working for the way you trading at the moment, you're gonna end up going to look for something else. For example, the DAX. I'm back on the DAX. I was gone from the DAX for a long time, but now I'm starting to get excited about it again. Something's happening. It's running between trends. It's coming off the support and resistance. It's going up and down. So it's doing something again. So it's worth the trade. The US 500 is doing something again. It's worth the trade. You know, you're not just buying it and hoping and carrying on. But the FTSE, I've lost interest in. Even though it's in a range, I've lost interest in it because it's just been sitting around here. And it's not conducive to me. So over time, what you'll find in the markets very often is you'll have your favorite, and then that favorite will not become your favorite anymore, and you'll go and find another favorite for a while. And then you'll go back to it, because you always do. You'll go back to it and you'll carry on trading it. So that's kind of how it works. And don't worry about that. That gold will go back to the way you knew it, and you'll start trading it again eventually. Okay, so the trend is your friend, and that is it. Yeah, and that's a structure change now. When you so that's what happens with many of these different instruments. Is you're having fun with it, you're trading it, and it's working for you, and then suddenly the structure changes, and then you're not happy trading it anymore. Just go and find something else. And there's a lot of traders out there that will only trade one or two products, and those traders are the traders that are going to struggle, because when that happens, the structure changes on one of their products that they trade, then they're not going to be able to trade. They're going to struggle, and they're not going to be making money, and they're going to get frustrated. And it's another reason that so many traders lose money. You need to really widen your aspects and look at everything out there. There's lots of things to trade, lots of different products to trade on, and you'll find something that'll be to your liking, and you can trade that for a while. So if you're open to, that's why I put this nice big watch list on. There's many more things to look at. I mean, if you go to my MetaTrader, sure. I can't even see what's on there. There's so much stuff. So, but this is just here, it's a nice watch list. There's a few things to look at. But on my main trading platforms, there's everything, absolutely everything. And I just go through it from time to time, and I see if there's anything cool. And then I just put if it's something nice that's good, I'll just add it into my favorites, even if I've never traded it before in my life. One of the things I'd never traded before was Bitcoin, and then I started getting involved in it, and now it's on my list. So yeah, You just got to look for things and be open to trading them. Brent is long, okay? But what you've got on Brent is this triple top, quadruple top, double top here. You see that top? All right, so that top, okay, there's your top right there. Now, I'm not going to draw one of these blockies in. What I'm actually going to do is put a straight line in here, because that is clear. There's a top, there's a top. And that's why it's bounced off there and it's going short. What I think is going to happen, and it's not for me to predict the future, it's come back, closed this gap that it left behind, and then it always closes a gap, whether it be today or in 5 years' time, it'll close that gap. But then I think it's going to come down and look for some liquidity, some money. So it's either going to come all the way back down to this, what is now support and was resistance, or it's probably going to come down to these levels here at the 77, take some money here, and then try and go back up again. So what it's done is just taken some money here, and it's just corrected. It could go back up at any time, but at the moment it's bullish. Now, another way to look at this is with the trend. Okay, so you've got this trend support, which is running through here. You can also pull it back a little bit there. There you go. Okay, which tells me that it could come all the way to the 77 level here. See, there's your money. There's your trend support. This could easily do this. It could easily come back to here and then bounce and go up. That's it. That's not guaranteed to happen. It could also just decide, oh, well, I'll just keep on going. It could do that and then just push through here. This is a very tight level of resistance, but it is a very important level. It's a full-on double top that's created here. Double tops, it normally will come down. So just be wary of that. And then there's also areas here. But that is just a big picture. And I just want to see, is there a pincer top there? No, there's just a change in direction. Yeah, red candle. No, there's not much going on there. So yeah, as far as I can see, it's just coming down, filling the gap. It might just fill the gap and go back up, but I think it'll come down to the trend support and then bounce up from there and go from there. Just remember, this level of 80 is a very, very strong level. I said it months ago that this is at the moment, you know, normally oil will trade between 65 and 120. Just does over time. But at the moment, it's trading between 70 and 80. And it has been quite a while. Okay. Been trading in this level 80, 70. It's been trading in this level for quite a while. So before that, it was trading between 90 and 80. And then it broke down and it's trading between 70 and 80 now. So whether it will break through and start heading back up to the 90 or not remains to be seen. But that we'll have to watch out for and just see what it does. If it does break through the 80, it'll trade between 80 and 90 again. It'll trade in that range, which is what it likes to do. For me to take a long, I'll wait for it to get down to this level, take the long from there. It'll be a better entry. It's almost like a retest. You know, it's almost like it's coming back to retest the levels and then going on, so to speak. So I don't know why that's there. Let's remove it. So this now becomes almost null and void, this one here, unless it breaks back down to the bottom side. And we're looking for a new level at the top, which is now 81. So my opinion is down to here, straight back up. Gaps. Can you explain gaps? Yes, sometimes in the market, and I'm not talking about a fair value gap now, okay? This is a completely different thing, all right? A fair value gap is something completely different. I do have a video on it, but it's more of an ICT concept or whatever the case. My concepts are more based on the Wyckoff system, but this is simplified trading that I give you, price action, totally simplified. So I'm not trading fair value gaps. If you want to trade them, I do have a video on how to trade them, what it's about. A fair value gap is like a distance between there, and you know that the one candle finished there and the next candle started there, and it makes a gap in the middle, and there's a belief that there's some money in that area. Okay, those are completely different. I'm not going to go into detail on that right now, and if you do want to, there is a video on my series. Just go to my channel and you'll find it there, FVG, fair value gap. It's there, but this is not a fair value gap. What the market tends to do in reality, and this has been for the last 30 years, we've known this. If a chart creates a gap, a hole, in other words, the price ends there and it starts up there, right? That's a gap, okay? For whatever reason, between market being closed and open, and it leaves a gap. The market will always come back and fill that gap, but not necessarily at the same time or the same time period. It could take a year to come back and fill that gap. But it's just a funny thing in the market that we've discovered over time, especially in shares, okay, is that if there's a hole like that, a gap, the price will always fill it and then continue on. But not immediately. I mean, it could have gone all the way up here and then come back, but it would have to fill that gap at some point. So it doesn't really help you with your trading, but you can know for sure that it will one day come back and fill that gap up no matter what. So the gaps are created by moves in the market, things that happen in the market, maybe while the market was closed or whatever the case, and there's a big jump. But yeah, it's not explainable as to why it does that, but it always does that. It always, somewhere down the line, it might not be immediate, it might not be in the same time frame, time, day, same week, but it will come back and close that gap up. So it'll come, this one is basically closed. Okay, look at that, it's closed. This price has come back, filled that gap and going. So this one happened immediately, but it won't necessarily happen immediately. And actually, can you actually consider this a gap? Because there was a bunch of sellers on the candle here. And you can only see it in the candles, by the way. Okay, so just for that information, yesterday S&P filled the gap. Interesting. Gap, I'm looking for the gap. Gap. Maybe there was a gap. Let's just see. Yeah, it's not showing on my chart, but yeah, okay, you know. If it filled a gap, it filled a gap. That's what it does. They fill a gap. And so now you know it's just a gap. Okay. Yesterday S&P filled a gap, yeah. All right, so just that's how we're explaining gaps. You don't trade with gaps. It's just something that you know. It's just something that you understand. If you're sitting in a trade and there's a gap lying there, you know that somewhere down the line, price is going to come back and fetch that gap. Okay, that's all. You don't trade with it at all. Fair value gaps, people trade with fair value gaps. But for me, it's not really a thing. This would be considered a fair value gap. You see where that candle ends there, and the next candle is there, and then the next candle starts up there. The distance between that tail and that tail, that's a gap. That's a fair value gap, as they call it. So what should have happened here is the price should have come back in there and bounced up, and as you can see, it didn't. So I'm not a big fan of that. It's something that I think ICT invented it. I'm not sure. But it's not my thing. Okay. I have done a video on it. But it's also something I suppose you can keep an eye on. The trouble is it affects your psyche, because now you're looking at a high probability trade and then you're thinking, oh, it's got to fill that fair value gap, and then it doesn't. As far as I'm concerned, keep it simple. You see a green candle come off the support or a red candle go through it, take the trade either way. No need to complicate it. No need to get out of whack or go crazy about it. As I said to you 100 times, The squiggly lines don't make you money. Trading's 50-50. This is a high probability trade. The strategy is what makes you the money. And the strategy, as you know, is something completely separate to this. It's all about how you manage your risk, how you put your stop losses in, how you take your profits. And you know that, go to the last video and have a look. You'll see the whole video is about strategy. And you know, at the back of my videos, I always talk to you about strategy. I'm not going to go over the strategy today because it's so in depth. But that's what makes you the money. The business plan, the strategy. This will never make you money. These systems will never make you money. They'll just give you high probability trades and worthless win rates. Because as I've said, win rates don't make you money either. They just give you boasting rights. Wendy, Rob, Aussie dollar, US dollar. How much longer will it short? Looks like it may be reversing. Been swinging it short and small lots and have done well. Business Sound, thank you for the gap explanation. If we can follow the rules, we place a pending trade on every gap with TP 10 pips from the gap full close. It will be high. Probably trading setup as always a gap. The trouble with gaps, just remember, is like I said to you, they can either fill today or they can fill next week or in 5 years' time. The gaps, I don't trade gaps because gaps don't necessarily have to fill. But you know they will, or immediately, I mean, they will fill. But it depends how much patience you've got. It's not often that they fill immediately like this. So just be careful of that, eh? Trading a gap, you never know when it's going to fill. You just have to know that it's there. That's all. Okay, so Aussie dollar, US dollar. I just want to do that for Wendy quickly. I just want to speak to Wendy about the Aussie dollar, US dollar. And I just want to explain something to you, Wendy, and that is a price. You know, you're looking at this price and you're thinking, when will this end? And believe me, I've done that a million times. When will this end? It's so low. I mean, gee, was this, how can this just keep on going? How can it be getting lower? Remember this morning I called a short on the Great British Pound US dollar. Look what it's doing. Okay. How much lower can it go? Euro US dollar. How much lower can it go? Well, you'll be surprised. You'll be surprised because this is the market. And this is what markets do. Okay. Now, when something's cheap, it doesn't mean that it's cheap. It just means that something's wrong. And there's a reason it's going in that direction. And you have to look at this in context. And the context is, when will the Dixie stop going up? Because that's also pushing the Aussie dollar, US dollar down. So you've got two factors pushing the Aussie dollar, US dollar down, and the one is the Aussie dollar and the other one is the US dollar. Okay? And if both are pushing it down, whew, it gets worse. So the only way to trade these scenarios is to trade what you see. How do you trade a trend or counter trade a trend? And that's the best way to trade if you know how. And it's simple. You see we've got our trend in here. It's nicely waiting for you. There's your trend. It's there. The way to trade this is the minute that breaks through that trend and you've got a green bar above that line, then you've got a counter trade that you can take. Now what you do is you take a long trade out of there, and then you take another trend line and you draw it along this side, and if it breaks back through that trend line, then it's going short again. Okay? It is a good idea when you get a breakout of any resistance or support is to wait for a retest. A lot of people will tell you, wait for a retest. In other words, a retest is let it go up, come back, take the price, and then go up. But like what the US 500 is doing here. You know, we took the short. It was going in our favor, but now I said it might do this, and it's gone back to retest. The retest can go either way for you. It can break through and go the other way, and then you lose out. Or the retest, it'll break and go to the downside, and then It's done its retest, it's heading on, and it carries on going down. That's basically a retest. Goes back to see if it can get some more money and then carries on down. So the Aussie dollar would be a similar scenario. It breaks through here. Now, in most cases, I would just take the trade and keep it simple and say, okay, we're counter trading, we're going with a stop loss. And if it works out, she goes. And if it breaks back through the trend support, then you're out of the trade. And that's as simple as it gets. Don't trade it now. Don't trade it because you think it's gone too far. Never preempt anything. The market will lull you into a false sense of security. Do not preempt anything. Trade what you see. And that's the only way to do it. So, hi Rob, Trading Campus wanted me to pay 5,000 US dollar for a course. No, sorry, I don't mean to laugh. Sorry. Sorry. I can't stand it. I really shouldn't. You know, it's not my place. It's not my place to tell you anything. But I wouldn't. I wouldn't. I must admit, 30 years ago, before computers, I did buy a course. I wasn't a fool, and I bought a course, and I got a big file. And there was a whole course, and we even phoned in to do the demo and everything and whatnot. There's nothing wrong with doing a course. There's really nothing wrong with it. But you can learn a lot of this by yourself. I can teach you the systems like here for free. And what are you going to learn on the course for $5,000? Let's see. You're going to learn all the terminologies and the abbreviations and all the fancy things and whatnot, which are not going to make you money. And then you're going to learn a system, whatever it might be, some fancy system, which are not going to make you money. It's just a system. They're going to teach you that the system will make you money, which it's not. And they probably won't even teach you psychology, and they probably won't even teach you the strategy. So all I can say to you, I'm not going to say to you yes or no, do it, don't do it. All I can say to you is, personally, I wouldn't do it. And I would teach myself, because the systems, the high probability systems, let's be in all honesty, as I've said in my videos before as well, a primary school child could learn this. The difficult part of trading is getting your mind around it and bending your mind around the strategy and the psychology. That's the difficult part of trading. And the sooner you understand that, then maybe you'll think, do I really need a course? Because in the long run, like I said, if it was as simple as these squiggly lines, everyone would be making money in the market because it's straightforward. But it's not as simple as that. You put two traders in exactly the same room, trading the same products. One will win, one will lose. Copying the same ideas because they approach it differently, because they have a different psychology, because maybe they use the strategy differently. It boggles the mind. I mean, you can both go on exactly the same course, two traders, maybe 5 traders. Send 5 traders on exactly the same course. All 5 traders will come back. They would have passed the course. They'll all know everything about the stock market. You put them in a room and sit them down to trade, and you'll be shocked and stunned at the different results they'll achieve. They won't even come close to each other. No 2 traders will come out with the same result, ever. That's why I always laugh at these guys that show you their phones and how much they've won in their portfolios and this, and copy me and you'll make millions. And that's not true. It's not going to happen. No 2 traders will make the same. No 2 traders can achieve the same result. So you can learn. You can figure things out like I'm showing you here. You can work around the strategy I'm giving you. You can work around the systems I've given you. You can work around the probabilities, and you can tweak them to make it comfortable for yourself or for your computer or for your system, or whether you trade on a phone or a computer or a tablet or whatever. And you'll work it out for yourself. And that's the only way to do it. But Yeah, I admit, I once bought a course. It wasn't a file. Days when we used to use the telephone and all that. And I thought that was the only way to do it. But, that course probably taught me next to nothing at the end of the day. No, I wouldn't pay that kind of money. I can't call anyone a scammer. But hi Vivian, all but welcome. Just when you say I think they're scammers, so I did not apply. Yeah, the big thing I find is, you can pick up, and I'm one of those guys. I will not diss any other YouTuber. I will not bring anyone else down. I won't talk bad about any other trader because everybody's got their own way. Everybody's got their way of doing things and their reasons for doing things. And I really, all I'm here to do is to tell you, be careful and don't believe everything you see with, like, the Ferraris and the Lambos and the money falling out the sky and that, and just be realistic. But I'm not one of those guys to diss those guys. As far as I'm concerned, there are scammers out there and there are not. But you can learn something from just about every one of those traders. They've all got some information to give you. But maybe some of them are out there just to get you to buy a course. Maybe some of them are out there just to try and get as much money out of you as they can for a course. I don't know. But what information they're giving you for free, maybe you can use it. Some cases you don't get much information for free. It's just all rubbish and advertising to get you to buy the course. Yeah, it maybe the course is real. Maybe it's good. I don't know, but is it worth $5,000 US? Holy mackerel, it's a lot of money. Okay, so my time, you say hi Rob, what's the local time when you start the live stream? So my time on a Tuesday is 9:30. I'm thinking of moving it to 10 here, which is GMT plus 2, South Africa. So, and then on Thursday, it's 2:30 in the afternoon for me. And the reason I do that is because the Tuesday one is to cover those guys that would be asleep when I have the Thursday one, and in the night, to try and gain both time frames, sort of thing. Because some guys are like, if I start early in the morning, it's late, and if I start in the afternoon, there it's late at night, or vice versa. So I try and pick up a lot of the American market, for example, on a Thursday, and I try and pick up a lot of the European market on a Tuesday, and I pick up both on Tuesday and Thursday on European market. But there are a couple of countries that are out of the time zones, so I try to be clever, which is not a great idea for me, to try and get both time frames to fit in. And maybe I'm doing it wrong, I don't know, but I'll see how it goes still. But I am thinking of maybe pushing Tuesday a little bit later. I might push it to 10 instead of 9:30 to give you guys a more room. But I'll have to see how the guys that are late, how they feel. And then on, like I said, on Thursday, I try and do the 2:30 session. Okay. Yeah, if you can, yeah. So I did not apply. That thing about the course. Yeah, I think Wendy put it in a nutshell and said, save your money and put it in your trading account. You can do a lot with $5,000. What Wendy said. With the Aussie dollar, US dollar, you have open right now. What if you move the stop loss down with price moving down and you get stopped out? Will you get in again after a touch of the trend line? If I get stopped out of any trade whatsoever, it doesn't matter. That trade is dead. I don't revenge trade it. It's gone. Then it's a new trade. So what I'll do is, if it gets to the trend line and it looks like a good trade to me, I'll trade again. But I won't just get back in for the sake of, it should have gone that way, I'll get back in. So yeah, you're right. What I'll do is, if it gets to the trend line and it says to me, oh, no, that's long or it's short or whatever the case, then I'll take that trade as a completely new trade, completely fresh. So if something goes, then that's out of my head. Push it aside. I'm looking at something completely new, completely fresh, and that's how I look at trading. I don't look at it as it was working. It wasn't. It was supposed to work. It didn't work, and I'm going to do it again. I look at it as that. I try and push it completely out of my mind, because otherwise it confuses me. And push it completely out of my mind. That trade's gone. I'm looking for a new trade, and that's as simple as it gets. For example, the DAX is another perfect example of that. If that gets taken out, I'll be looking for a completely new trade, and that's because my stop losses are also quite far out. So, I don't worry too much about that. I've heard of Top Step, but can't quite think who they are. I've heard of them somewhere. Yeah, I don't know where I've heard that terminology, that name. I don't play a lot into names, but yeah, I've heard that somewhere. I just can't think right now who they might be. Bom 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 bom. So scammers. Yeah. Vivian. Okay, so yeah, there might be a few of you guys who are quite late in the evening or whatever the case, but if there's not a lot, then I will move the Tuesday show out a little bit, because I know a lot of guys have to get on really early, and that's quite a trick on its own, eh? Ah, right, Vivian. You see, I'm South African, so possibly maybe I've heard of them, but I can't use them. Okay, and how close do you keep your trailing stop? I mean, you don't want to miss the big move by being stopped out by a trailing stop. My trading stop will always be, so if I've got $1,000 stop loss on anything, then like here, there's no trading stop at the moment. I'll move that up to break even when I'm about $800 in profit, $800 in profit. Then I'll move the stop loss up. If it goes over 1,000, maybe 1,200, then I'll move it into a decent profit, like 500-600, halfway behind it, and allow it 500 or 600 to run, because you start off with $1,000 stop loss. That's quite a space. Now you're expecting it to make you a profit by giving it a $200 space to move. It's not going to work. So you've got to give it about $500, $600 space to move still. So, what I normally do is I don't worry about the price as much as once it's in profit, like $600-$700, then I'll move it up, and then I'll start following it up from there. And I'll keep that distance until it gets close to take profit, or close to an area where it might take profit. Then I'll bring the stop loss right up behind it, maybe $100, $200, because then I don't care if it takes it out. If it takes it out, I've pretty much made target, and I'm happy with the money I'm taking. So instead of just closing the trade because I've got loads of profit, all I'll do is then I'll just take the stop loss right up behind it and say, well, if it takes this profit, I'm quite happy with the profit I'm getting. That's how I move the trailing stops. It's very much my own little simple method so that I can take as much as I can out of the trade. That's all. There's nothing technical about it, nothing special about it. It's just a question of giving it some room. And I think $500-600 is enough room. And I mean, if it takes that out, then it's going the other way. And really, that's on $1,000 stop loss I'm talking about. If it's on a 250, just work it out differently. But like I say, that's what I'm working on. And then that works for me. I don't even look at where it is the stop loss or anything like that. All I look at is it's the amount of money behind the trade. But the first one is it remains there until such time as this is showing me a profit. That's the only way to do it. That's this. Oh, this is the funded trader thing. Okay. Cool. 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 So I wonder if these markets are going to continue on down or if they're going to go back up. It does look like it wants to break to the upside. It looks like people are getting excited. There's a good chance that this trade might actually go against us, but I don't know. You know, with that head and shoulders and with that move down there, I think it'll still go down. That's why the stop loss is up there. And that's what I always say to you guys. When you put a stop loss in there, understand that you put it there for a reason. Don't move it away when it gets up there, and don't preempt anything, because that's why you put it there. You had a plan when you started out. Stick to the plan, you know, stick to the plan. Don't get excited about it. Don't just run for cover. It's easy to click the button that says take profit. I find in the markets, one of the most difficult things for guys to get around is to take profit. The stop loss is actually quite easy, because taking a stop loss, you've resigned yourself to the fact that you've put a stop loss in place. So psychologically, you know there's a stop loss in place. And if it takes it out, you kind of resign yourself to the fact that, okay, it took out my stop loss, I'll accept that and I'll walk away. The most difficult part is when it goes into profit and you got your finger on that sell button, because you just can't, you can't get over the fact that you're in profit and you have to leave it there. And if it comes back and it starts to go into a loss, it actually affects you. It doesn't affect me anymore. I mean, this US 500 was way in profit yesterday, and now it's like gone the other way. And most people would be like really upset right now. But for me, I'm kind of still, this is still the trade, and you got to think of it that way. It's still in the trade and it can still go the other way. So don't let it panic you. Don't let it get you down. That's the thing, because the profit is the worst. When it was in a profit and then it goes into a loss, and that's actually you thinking to yourself, oh, I should have just taken the profit, you know, whatever the case. But then you end up with a run of small profits. It's called scalping. You end up with a run of small profits and one big loss, and that you go and say, I got a win rate, and you got this one big loss. Which, by the way, don't forget that course is going to teach you that you need a win rate, most likely. It's going to teach you that the market is all about the system. It's going to teach you that you're going to have the 70-30 win rate and you're going to make loads of money from the charts. It's going to teach you all these abbreviations and all the in-depth stuff about the markets that you don't really need to know. That's not going to really make you any money. And you can come and say, I know about FEG and I know about this and I know about that and blah, 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 and talk terminology and whatnot till you're blue in the face. And then think, why aren't I making money? Yes, I have, David. I've done a clip on calculating these trade sizes. So, you know, I've done it even in the live shows, but I'll tell you what, it's a bit late now. But you know what, David, I'll do it on the Thursday live show for you guys as well. Okay, I'll just go over it, and I'll go over it again and on the best way to calculate your trade sizes and that sort of thing, and then you can work it from there. And if you've got a good trading program, it's actually not that difficult. You can just work it out. But yeah, your trade size is very much based on the strategy. It's very much based on, I'm just going to quickly go over this. I'm not going to show you on the screen, but what I'm going to go over quickly is what you do is you first work out the stop loss. So your first thing is you say, I want my stop loss there, okay? And then you say, I want my stop loss at 206. That's where I want my stop loss. How many contracts can I get back to the cost price, which was 203 in this case? And then the system told me you can buy 3 contracts and then you'll have a $900 stop loss. Works for me. That's close enough. So I buy 3 contracts or sell 3 contracts, right? But where do I want my take profit? Because my take profit's got to be much better than my loss. So I work out where I want my take profit. I mean, I am pushing my luck here a bit, but generally a reasonable one even here would be fine. But I did put it a bit further out in case I'm not looking. And then I know that I've got a decent profit level on those 3 contracts, sell the 3 contracts, and that's how you work out the size of your trade. But I'll go over it in detail on the live on Thursday so you guys can get a much better picture of how to do this and, you know, a much better way of actually doing that. Because I'll go over it slowly then. But that's the gist of it. That's the simple way of working it out. So remember, first, work out the price that you want the stop loss at. That's the invalidation area. Then work out how many contracts or points or shares or whatever it is you're trading you can get back to your cost to make up that $1,000. And then you see here, worked out, okay, so it'll be 3 and then work out from there, take your trade from there. But you're probably wondering how you get to that. In most cases, you can actually just click on the stop loss amount and it'll tell you how many contracts you can have to make up that amount of money. But in some cases, like MetaTrader, you can't. You have to work it out. So we'll go into a bit of detail on that next time. Okay. I think that will be quite an interesting subject, quite an important subject. So today we spoke mainly about why win rates don't work and the 50-50 the 50-50 statement that I make that so many people don't like or disagree with and whatnot. But I hope you guys have gone into that. I've also gone into liquidity a little bit. We've spoken about liquidity. So yeah, next time we can go into a little bit about trade sizes and we'll talk about that. So guys, I'm going to be on my way now and head on and do my thing. And I'll definitely chat to you guys on Thursday again. And don't forget to come back and watch tomorrow's video, which is, what did I say it was about again? Investing. Investing. Tomorrow's video is all about investing and how to invest in the markets, showing you the investment calculator, how much you can make over the different years, and that sort of thing. It also talks about how you can use maybe just Yahoo Finance. There's lots of other ones as well to get your information and that sort of thing. So guys, you must have a lovely trading day. And until I see you next time, I want to thank you guys for being with me. And we shall most definitely chat soon. Guys, thanks for